Yeah, Bo, I'm trying to figure out exactly the schedule for next week because things will be messed up. Give me a sound check as well. Yeah, that was only if you're getting paid, Mr. Tater. I'm just joking. So, I was waiting for some stats on the computer to run on the models, so I needed to wait until those are available. That is what the bottleneck is every night. So, our data vendors sometimes will get things on time, and sometimes they don't. Awesome, thank you. Get going here in just about 2 minutes, folks. Still putting the last couple of numbers together, so it's the way it goes some nights. Welcome everyone to the Kendall Report. It is a little bit after 9 p.m. Eastern Time, and I'm still trying to figure out, as we get into tonight's video, how I'm going to handle next week. One of the bottlenecks is that I have to wait for the database to run, and on Sunday night I'm going to be on Mountain Time. I'm no longer going to be on the same time, so they won't finish until 6:30. Normally right now on Pacific time they finish at 5:30. So I'm trying to figure out, that's a key element of the analysis. I hate that we don't change our clocks, so I'll figure out something. I'm going to put something on Twitter, also try to post something, maybe a note on the channel itself on what the plan is will be. But for the moment, we're going to stick with 9 o'clock. Sunday won't be a problem because the servers will run tomorrow night and everything will be ready. It's really Monday, Tuesday through Thursday that we'll have to figure out. So I've got an extra day to figure that out. So let's get into tonight's video. Well, we just see the markets continue to move higher, all-time highs again. S&P up 0.42, NASDAQ up 0.81. The Russell was flat yesterday, but year-to-date numbers are starting to get pretty insane, actually. 24.6 on the S&P, NASDAQ up 23.7, so NASDAQ is playing that catch-up game with the S&P very quickly, and Russell up 18. And if you go back to early in the year, the Russell was up 18, so we're getting back up to those peak levels on the Russell. And whether the Russell is going to be able to overtake this, I don't think so. The spreads pulled in a little bit. Go through all the details here in a minute. But there's plenty went on yesterday, I guess. The claims numbers came out. I'll just go through a complete review of what happened yesterday, and we'll talk about tomorrow's activity and expectations here in a minute. But we obviously saw the growth come back into play again yesterday with the NASDAQ leading the way, not by a lot, but a decent number. These are big numbers when you get looking at where we are on the scheme of things. But claims came in at 269, better than expected. We saw all these metrics just continue to get better. And this was the expectation because these are reports from still October. And I'm still thinking, we'll see if I end up changing my mind on what I expect for the economy, but I still think we're going to start to see some slowing. Some of it's going to be seasonal. A lot of these reports that we're going to see coming out as we get into November, December, and actually into January will be, quote, I'll do air quotes, seasonally adjusted. Otherwise, you're not going to know any of these numbers are going to be real. There's only a couple numbers that the government ever releases that you can really put your finger on and go, that's the real number. Most of these numbers have some adjustments that are going on, and so we're just looking at these numbers. It's something to talk about every day. In the end, the technicals end up driving a lot of this stuff, and at least market sentiment is continuing to be pretty positive. All-time new high again, like I said. One of the things that came out of yesterday that nobody was talking about, and I'm going to talk about it tonight. This will get into building into some of the things that I think are important, and is productivity dropped like 5%. It's the biggest drop since I think 1981, and that's around the time when I had been in the markets about 2 years back then. And those were an interesting time because we're coming through a recession, came out of the Jimmy Carter days, and stagflation and all that stuff was going on. And this productivity number, I think, is way, way more important than maybe the employment number, because that drop in productivity, I mean, productivity to me is like the silver bullet for the economy, right? If you've got high productivity, that just accelerates things that are going on in the economy. A couple of years ago, this productivity number was really climbing. Now it's just plummeting for whatever reason. I won't make any assumptions about what it's happening, but there is definitely some kind of change that's happened in employment. We know that we're still 5 million jobs underneath where we were back in late 2019, pre-pandemic. All of this stuff is just, these metrics are way behind. And I kind of tie this together with coming into the employment report and what we're going to see tomorrow. But, Powell yesterday was talking about, getting to full employment. He made a brief comment that we might get, he's looking at, we're going to get to full employment by next June, that's why they're tapering. They've got it all figured out. And I don't think they have it all figured out. I think nobody has it figured out. In the same breath, he was mentioning that, they have no clue what they're doing, right? So the realities is this is the guesstimate of when things are going to be just back to normal. Everything's going to be fine. The economy is expected to continue to grow all the way through this period. Now, it may happen, but I think there's going to be some challenges here, and a couple things that are a challenge, and we know what's happened with energy prices. I'm going to talk about a number of things here before getting into tonight's technical view. But the bottom line is there's just a lot of things that are going on this productivity thing that is really drawing down the economy. People aren't going to work. We know all that narrative that's out there. But we come into tomorrow, we're looking at employment numbers coming in at 4.7. Unemployment number, I believe that's a slight uptick. I didn't write it down when I was getting ready. 450K in jobs is expected. So we got, 5 something on the other day on ADP. They're really not related that much, but this will probably be one of the last really good employment reports, I'm thinking. We're going to see a lot of things go on. I watched the CEO of Airbnb, and he's like bullish beyond bullish because now they're booking things, and maybe international travel and all this stuff will continue to grow, and we'll see all of that work out. I'll be adjusting things. I sound like Powell right now, but if I see things that start to shift, we'll definitely talk about it. But at the moment, the markets don't care about any of this stuff. The market sentiment just continues to climb. And there's an interesting technical situation that's coming in tomorrow that I'll cover here in a minute that may surprise. It surprised me when I was doing the research for tonight's show. So let's take a look at a couple other things here. Let's talk about oil just for a second, and I'll cover oil in more detail, but I just want to make some comments up front here. I think it's interesting that OPEC has decided to raise, production by 400,000, and supposedly there's a shortage of 7 to 8, and they shut down the shale here in this country. They shut down a lot of stuff, and we have more than the capacity to pick this up, but you don't turn it off and turn it back on. It takes a while to get some of these operations back up and running. And, there's still a lot of things going on from the standpoint of ideology in the current administration against fossil fuels. And then in the end, and, we've so underinvested in the need for fossil fuels. This ESG thing, while it's very in vogue right now as far as an investment strategy, is really causing a lot of things to go away from fossil fuels. These big oil companies have got, basically people that are on the green energy and trying to switch things over. Well, it doesn't switch over. This is a multi-decade situation here. So we are going to end up, I think, as we go in, maybe in the next, we'll say we look out 2 years, we could see $100, $150 oil just because of all these shortages that are going to be out there. And I think everybody has underestimated the use of oil and underinvested in these areas. So I'll cover some of the Sunday night's video, just by the way, is going to be, I believe, a significant video if the weekend will allow me to have the focus that I need to have to put out a interesting video. Depending on how it goes, it may be produced ahead of time, so there just may be a playing of the video like I used to do before I started doing the live streams every day. We'll see what happens because there's a number of things going on. Let's take a look, and let me just get up to let's go and take a look at the database here. Before we get into what's happened today, I just want to bring up this. This is the intermediate database, and those of you that follow me know that every Friday night we run our weekly models or the intermediate models, and those get updated and the database shifts from here. So right now we've got 42.71% of the symbols on an intermediate level or on weekly trends, which typically last 240 days. And we saw a pretty good rotation out of this and a refreshing of the database. So that's positive. What I'm still looking for here is the possibility for the market to start to show some of the rotation going into these small cap stocks, or seeing something that is positive long term, to see a different set of stocks start to come in play. As it stands right now, markets are going up, but we're still with a 42% bullish mode. We've got a fairly narrow amount of stocks that are participating, and I would like to see this thing expand. If it does start to expand, especially if the expansion is into the small mid-cap sectors, some of these other sectors are likely to rotate. That will be important. And just looking at this screen here, what we're looking at there right now, there's only 5 of the sectors along capital goods have been on for a while. It's basically very mature. Energy is mature. Financials is still got a ways to go. Services is overplayed a little bit. Utilities are pretty much mature. So what we want to see here is some kind of rotation into these bottom sectors here to see something come in. And technology's been out for a little while. I'm not going to go through a full analysis of the intermediate trends, but these are the sectors that are still in play. But while they're in play, they're also somewhat overextended. So we still have, the market in a place where it's ready for a rotation. This is what I'm going to be watching for. Maybe we'll see another sector or something come in and play on the intermediate. So let's go over to the daily and look at what came out of the models for tonight. And we had a slight positive rotation. 48.37 is the percent bullish. We saw 525 buys, 338 sells, so very little traction. And once again, I've talked about this night after night over the last, I don't know, we'll call it last 5-10 days, that we continued not to see any big traction come into the markets here, and that we're really just kind of rotating a little bit here. There's not a lot of activity. We got a neutral on one of the models and a bullish ratio on the 3.2 model. And so there's a little going on here, but nothing of that is substantial from the standpoint of, positive rotation you can really start to hang on to and goes through everything that happens, I guess, as we go through these different cycles. So we're still in this, I would say, in between cycles on the intermediate, maybe seeing some rotation back in. If we do get some positive rotation, then that is going to set the tone for maybe a lot higher prices. And I'll be looking for that tomorrow night as well. So that, and all this stuff will get covered on Sunday night. But I definitely have a little bit of an agenda running in the background that I haven't talked to you folks about yet. And some of this stuff doesn't matter. I'll release it in the best format that I can to help you to understand what is going on here. And it's the best way to put it. Some of this stuff, there's a statement that Ralph Elliott made, and it's interesting because he said one of the hardest things that you'll ever have to do looking at Elliott Wave, being an analyst or technical or otherwise, is believing what you see. And that's what I'm struggling with right at the moment. Let's go ahead and dig into the indices now. So we're looking at the daily S&P. We are down 25 cents. I don't expect much activity overnight ahead of the employment numbers. Everything's kind of queued up there. But there's something on the screen. This was the surprising element when I was doing the research ahead of the show. These two dots here, there's a cycle event coming in. And it's very possible, because we're trading all-time high, that this is going to be a minor cycle top. And the number that I've been talking to you about over the last, let's say during, going back to even Sunday night's video this week, going back to Monday, is this 4684, I think is the number. I'll bring it up here in a minute. The 46, we're right at that number. We printed up to 77 yesterday. So it's starting to look like potentially we could have a little minor top here and set up some consolidation. There's still like great numbers out here as far as the PPMs go. PPM 1.29, PPM 2.29, PPM 3.12, but we're starting to see some underlying acceleration. So this is not likely to end up to be a major top, but it could be a hesitation point, and maybe we get some consolidation between, maybe the 10-period moving average right now is 45.94. It is rising. Let me see what that number is. It's 46.08 for today. So all of a sudden that's going to be probably 46.20, 25, maybe as high as 46.40. I'll cover that as we get into next week. But the bottom line is that we could see a little consolidation here before the rocket ship continues higher. But at the moment, PPMs are rolling a little bit, with the exception of PPM 3. You see, I'll put a cursor over here so you can see this. But this is starting to accelerate, which tells you that this angle of attack that I talk to you about all the time is actually getting in place. I talked about this a number of weeks ago, starting to unfold, and here we are with nice trend mode stats with, like I said, with the PPMs above 0.25 on 1 and 2, and that's all you need to really perpetuate this thing to keep going. So any hesitation we have will likely be a consolidation, most likely represent a potential minor 4 wave, something like that, before we see markets going. And like I said, on Sunday night, I will go into a lot of detail, because there's some pivot numbers above this market where it's at right now. And if we get above that, we're literally going to see some things that folks never thought. A number of days ago, one of the titles to the daily video was a melt up, and we're pretty much having a melt up, but we're not seeing that crazy parabolic curve. And I'm not really expecting that, but there is some things that could happen here over the next several sessions that could set that up. We've got big news coming tomorrow. We'll see what happens from that standpoint, but I think it's going to be very revealing as we go forward. I just want to go to SPX, and I'm going to cover a couple things on SPX. I'm going to cover we'll look at the short term. Before we go there, I didn't do the expected ranges for the S&P futures. Right now we've had a 77 high, 69 low, 65 is S1, and 81 is R1. We're likely to get some volatility. Can we print up the 46.90? That would be a pretty crazy number. That would put us above some of these other numbers. I believe the 46.84 numbers on cash. I'll get all this in perspective in a minute, so bear with me. I'll get these numbers when the charts come up. But the bottom line is, we're right at that inflection point right now that will actually tell us a lot about maybe the next 5-10 sessions, something like that, and we'll get that review. But the range tomorrow, S1. Let me get to the range here. S1 46.65. Maybe we could see S2 R1. I have a sense that we could get a little bit of downside tomorrow. We'll see what happens. But that would be the extreme. 56 on the downside, 81 on the upside. And as always, these numbers are pivots. So if you take out R1, then 46.90 would be the next number. Let's go to the S&P cash here. And you see that same cycle's hitting. So this was the first dots that come in on this indicator are actually the warning for the cycle. And this is I'm really hoping that whether it's this weekend or in a couple weekends from now, that we finally get this trading view thing going. It's been a nightmare over a couple things. Trading view is not really set up for some of the things that I want to do there, so we're trying to do some workarounds. But this indicator, I'm planning on putting out this cycle indicator, is going to be actually just out to the TradingView community. So I've got a couple of things I'll be putting out. But this indicator is really good, especially when you see, the last time we had a cycle here was way back here. If I go down up on 8.5, there was a bottoming cycle. We had a little dip after that, but then This is potentially, since it's coming at an all-time high, there'll be a couple things that I'll talk about on Sunday night after we see the action for today. Let's take a look. Yeah, so the expectations on the cash here, S1, so you can see 4680 is out there. 4686 is R1 for Friday. 4673 S1, so S2 65, that would put us about 15 handles down. S2 possibility, I mean, we're getting close to, it won't take much to print this thing up to 4700. Let's dig up that number that I was talking about earlier, this upward range number, and this is it right here. I'll bring that up on the lower screen. Let me get full screen so you can see this a little better. Yeah, so the next number here, this is actually on cash. I'm going to go back to the futures for a second here in a minute because that number must be on there. But once we're already above 45.70, the next number is 47.68, which is 100 handles higher as the next target on this market from that standpoint. We look at the market grid for the weekly S&P cash right now. We're looking at R2 was 60, R3 46.89. So we printed 83 so far, and 47.14 is RTX on this thing. And we look at these weekly PPMs, they're all incredibly bullish. That angle of attack is in play. The support levels are way below this market. So they're not even in play right now. We're really just looking at what's likely to happen on the, as far as the market grid goes. That'll get updated on Sunday night as well. Okay, folks, getting a little long in the tooth here on this show tonight, so I'm just trying to get through it. There's a fair amount with all the news coming out, but we'll start here with the daily NASDAQ. Here's that cycle even on the NASDAQ. So NASDAQ, I haven't looked at the Russell yet, see if it's there, but it looks like we've got that same cycle coming in right now on the NASDAQ. So it's going to get interesting. The NASDAQ supports quite a ways under. We have printed up in that 16,000 handle I was talking about. We did get the RTX sell signal yesterday, so take a look at that. The RTX is 16,292, closed 16,330. So we got that yesterday. We're down a little bit. Says a couple days sideways to down. Don't think we'll exceed much here as we look at today's expected range. Probably worst case is maybe just because there's a little more volatility, we could see somewhere between S2 and S3, 16,232, 16,181, high 16,377. There's a good chance to see some hit on volatility here strong. And I'm going to go with R2, S2 for the daily tomorrow on the range and use these numbers as a pivot to what is likely to go on. I'm going to bring up the weekly, the same situation in the weekly, the high 16,376, RTX 16,363. So if we closed above that number, that 16,363, we'd get a weekly RTX sell, which would suggest 1 to 2 weeks of sideways. We'll see how this plays out, but that'll be the number to watch tomorrow. And what's interesting about this on a weekly, we did have that cycle low about 4 weeks ago, back on 10/15. So that's an interesting cycle. Like I said, I don't see anything major rolling over here just because of the formation of all the PPMs and across the board on this stuff. So let's get to the Russell. Russell's actually in position. This is the weekly Russell. RTX on the Russell is 2365. We're trading 2402, so anything over 2365 close for Friday is going to put us into that RTXL, which tells you there's probably a couple of days of sideways, which I'll cover in detail on Sunday night. There's really one of the things that is happening here that, as far as I'm concerned, is super constructive, is that the ppm1 is now at a plus. This is weekly, so this is the intermediate trend, is up 0.55. We're seeing ppm2 cut through its first second derivative. It's at 0.14. ppm3 0.37. So all of these are starting to turn up really nicely. They're crossing through some of their first second derivatives, which tells us that we're actually beginning somewhat of a new trend. It doesn't mean that we're going to get that we can't go sideways for a week or two and keep this trend in place. But this is on the Russell is just super bullish. We go over and look at the spread real quick. You see it downticked a little bit today, but we're still within this consolidation range and the sideways range that I've been talking about for a while. So that is just continuation of what we've been seeing. I think there's some really encouraging data coming out of the Russell versus the NASDAQ, and it's going to be interesting, the battle and the fight to the end of this year. And it's unbelievable, actually, that we are actually not that far from ending this year, right? We've been having so much fun. It's been pretty amazing. So let's go back to the indexes here for a minute. Night video will be at 9 o'clock. That'll work fine. I have to figure out a new schedule because of the way that our servers run, and they're not going. We're hooked up to New York, right? Our data vendor is an East Coast data vendor, so we pull in the data. Arizona doesn't change your clock, so I'll figure out how I'm going to do the streams. Actually, Tuesday through Thursday. Sunday night should be fine. So expect that, and then I'll make an announcement. I'll figure this all out over the weekend and how to handle that. For the rest of this show, though, we're going to go into crude. I had some comments. If you missed the opening comments, I would definitely go back and see what's going on, what I had to say about crude. I'll cover a little bit more about this in a minute, but I think there's some interesting things going on. I was looking a minute ago, we were up over a Dow. We're back up only 80 cents right now. And there's some numbers that I've been targeting over the last, I don't know, 4 or 5 sessions. I've been talking about, this is the weekly chart that I've got up here. And the weekly chart, we went down below the STX number. STX is 79.73. We printed down to 78.25. That was down in that range where I was talking about an extreme. And so things were really getting carried away. There was a lot of the rhetoric that's going on with the move and decisions by OPEC. And so we're definitely probably at a bottoming phase. I've been talking about this. My expectation is first to build some type of high-level consolidation. I think the downside that we see right now, the absolute extreme now, is between 77.50, 76.50. That's going to be the downside. We are seeing some loss in momentum. We're seeing ppm2 cross over first and second derivative, and so that is the setup for some kind of flag pattern, something to set up here at a high level at these highs of this particular sequence. So this is going to continue to evolve, and I think there's going to be a lot of talk around the oil. And one of the things that I didn't mention on the beginning of the show, but there's some kind of rumors running around right now that the strategic oil supply, there could be a release somewhere 30 million barrels a day. That might be a thing. And certainly, if you're anti-fossil fuels, why not just burn off our strategic supply? all we need is sun and wind, right? I did see another announcement that there's an aggressive move for putting wind turbines off, on the shorelines. And the problem with electricity, it only travels about 3, maybe 400 miles is all you can push it inland. So I guess it could power cities and things of that sort. But there's a lot. I saw 1.6 million windmills needed to supply the whole country, so I don't think we're going to have that many windmills, right? But so this crude oil situation, I think they're going to want to maybe to save face after some of the things that have been going on in this country politically, that they might want to see these oil prices flatten out a little bit. And like I said, that may be enough to generate this broad trading range. The absolute extreme would be down to the 21-week moving average, which is right now 73 handle, 74. We'll see what happens, but I think we've definitely got some kind of setup here for this thing to continue. We'll see if there's any release or any talk about this strategic oil supply release, and that will get interesting. I think there's already been, Congress has already passed a bill to sell quite a bit of this oil anyway, so they basically wouldn't even be that big of a deal to announce something like that. Whether it matters or not, we'll see, but it's not going to be replacing what OPEC is promised to increase 400. And by the way, I've been watching OPEC, for the better part of 40 years. These guys never do what they say they're going to do. They'll even do more or less, right? It'll be one or the other. So, but I do think we have some consolidation here in crude, and maybe that will they can moderate some of these things, and all of a sudden the inflation story is going to continue to be what plays out as we go from where we are right now into 22 and beyond, for sure. That's the transitory situation that we're all going to be talking about. And I'll put it on screen here for a minute. I'll just leave it in a small form, but the BDI, the Baltic Dry Index, is just plummeting. I mean, that thing's down. It was, what was the high here? Let me just see what the high was. It was 5,600. It's now to 2,679. So it's just plummeting at the moment. And, I'm trying to research what's going on with BDI, but I mentioned this last night. We're not really seeing, or the people that are in the shipping business, they're not seeing rates come down on prices for shipping like the index is. So this index may be just a lot of speculation in there. And we saw the same thing with lumber. I mentioned this before as well. And we saw the same thing with lumber, just plummet down. But when you go to, if you're a contractor and you had to buy some lumber, you're not seeing the benefit at all. You're not seeing any real material decrease in prices. And this is part of the inflation story, I believe, is like here with shipping and just about everything, doesn't matter what it is, these folks have got the pricing power, and they're going to use those excuses as long as they can to keep prices up, and maybe they'll never drop them. We'll have to see what happens there. So there's going to be an interesting story to unfold, to say the least. So next market we'll cover here, and I went to crude, and I should have went to the treasury, so we're going to do treasuries now. So the treasury market came back to 152. I've been talking about us being 160, 150, 152. We're right in that range. We're going to be locked in there, I think. We're seeing a similar thing here as far as if you wanted to correlate some of the things going on, it is somewhat correlated to maybe crude oil. But what we're looking at here is that the ppm1 is up at 1.45. And that's pretty robust. That tells us that the supply line is 1.48. We should stay above that line as we come in through the next week or so. We're also seeing ppm2, and this is a scenario that I talked about a while back when we were ppm2 at one stage was down 1.36, and now it's a plus 2.1. ppm3 is a plus 0.7. So what's happening is we are forming this new trend. I'm still looking for the 175, 185 level, and then longer term, there's even more in there. So I'm not sure what's going to be driving that, but for right now, possibly the next 2, maybe 3 weeks here, we're likely to stay just in 150, 148, 160 range on the upside. If we just look at the grid, what's out there right now, that's putting in us, the range is pretty broad. 146, actually 1.43 all the way to 1.65 is within the range and expectations from the market grid viewpoint. So that is certainly in play there. But I think we're going to just sideways here, and we'll be watching the next couple of weeks how these ppm set up, and especially ppm2, which is just about at trend level, and that's all the way down at 1.41. So the absolute bottom of this thing is probably 144, 141, and we've seen these kind of prints before, and I just expect to see that happening, and that's probably, this type of action is going to continue to be most likely somewhat bullish for the growth stocks. You know, the NASDAQ is going to like that if we continue to see rates stay down, and it doesn't look like there's anything going on from that standpoint. So I'll bring up this spread chart here. On the yield curve, and we really didn't see much movement. There was some movement here on the, if you look at the far screen, let me go full on this, is what you'll see is there's some steepening coming back in. I went through a big rant last night. I'll keep it minimal tonight, that the yield curve needs to steepen a lot. The Fed needs it to steepen a lot. This will keep them to be able to keep the tail wagging the dog. If this goes any more flattened as it has been, that will be a bad sign that the Fed is going to be in big trouble. And one of the things that Powell said was that he has to, you know, they're going to be flexible, whether they need to do more or less. So they could actually, if this thing's starting to flatten too much, they would be in trouble. They may actually maybe even try to keep aggressive on what they're doing with the taper. But they're going to focus, I talked about this last night, they'll focus their purchases to fives for the most part. And that also gives them a good bailout point when they start liftoff. Somebody asked on the channel last night what liftoff is. Liftoff is when they start to raise rates. And what they're saying is they're going to get rid of all the QE altogether, and then liftoff or raising of rates will start. And everybody, I mean, the schedule's on for next June, July for that to happen. And the way the markets have been running, I mean, that's exactly what they'll probably do, unless something gets blown up here on a chart like this. Then we have some other things to deal with that you're typically not going to have to deal with. Okay, so kind of did things a little different. Let's go to gold. I was impressed by gold, to say the least. This is a weekly chart. I'll go full screen and bring up the daily. So before I dig into the details, you have to ask yourself, what is going on with gold? It's been sideways, and you know, it looks terrible. We get this big, we traded down. We got a STX buy signal last night. Now we traded up and got a RTX sell signal, but we're still up, and we're still at that point. So far, the high overnight's been 1796. 18 close over 1800 would be great, but closing right here, I'll show you on a weekly chart, is going to be actually enough to start to set the tone. We look at the daily PPMs here. The daily PPMs are trying to turn up. Everything's set pretty well there, and we're back above. pressing that 200-day moving average. The encouraging thing for me is that the PPM, the WaveTech 200 down at the very bottom of this page is actually showing it's turning up. And this is suggesting that the 200-day moving average wants to roll up and start to advance, which would be super bullish on the long side. So that's what I'm looking. Let's go to a weekly pattern here. And some new calcs in here. I mentioned them the other night on a weekly is target for a minimum move to 1880, but we've got to get above that 1800. Yesterday, it didn't feel like that we'd even be trading at these numbers. And I remember saying that, you know, this thing doesn't look as bad as it feels. And this configuration here across the board on these PPMs are quite bullish. We still have some work to do, but like I said, 1800's magic number. And I think there's another story being told here that there seems to be, I've been told by hundreds of people on the channel that gold is done and Bitcoin and other things are now inflation hedges. I don't believe that. I still think that gold has its place, and we're going to see this thing really move up. And this long pattern, 8-9 months of chop is going to end up to be a long-term base and a substantial support, I think. We just have to get above these levels. There's some other numbers out there, 1920. There's lots of numbers out there, but we're definitely seeing things turn up. And like I said, I'm encouraged. This is what we should see on Sunday night when I come in. The PPM2 is at a minus 0.23. It should pop up potentially through its first derivative at least, possibly even more. And what that's going to tell us is that the downward pressure is going to bleed off, and we're finally going to be in a place to turn. So we'll see how this sets up for next week. Okay. Final market we'll go through is Bitcoin. I've been talking a lot about this magic number, 60,612 is my magic number. This chart does not close until Sunday night. And what that tells me is if we can continue to maintain right around this number, this 60,612, that's going to be a significant number. And we'll start to see further acceleration. PPMs are on PPM1 is on a weekly basis is about to turn up and go back through its second derivative, which suggests this 10-period moving average is going to maintain its upward slope and that angle of attack. So right now that number roughly is about $1,300 per week. So on Sunday night, that number will be roughly around 55,000. So the downside in this market is starting to dissipate as far as the risk. So around 55,000 would be a really good place to buy. We look at the market grid here. 58,214 is S1, S2, 5611. So that's going to be about the end of the range on the upside. The high so far is 64,286. We're looking at right at between R2, R3 for this week. So this numbers will get updated after midnight Eastern time on Sunday night. Let's go to daily, just get a short-term view as we come into Friday. I talked about these new objectives, 85,000 on the upside. We're still struggling a little bit here on the PPMs on a daily. There's still some potential for a move back into the 40, which puts us right into that 54.8 is that number. 55, those weekly numbers I just talked about should be the downside. And it looks to me that we're going to remain somewhat in this sideways range until we get through the weekend and maybe into next week. Yeah, I see Steve Weiser's comment there. It's very true. This is the reason why the PPMs are very interesting in looking at the 0 and 100 meters, the stochastics, RSI, and other meters that cap out, because they can, what they really are, I used to always use the analogy that they're really measuring the output or that angle of attack. And the angle of attack can get too steep, which at that point, you'll, in a parabolic curve, you finally get to some peak value. But where this position is, especially on a weekly, there's still that angle of attack on that 10-week moving average on Bitcoin is just really solid. I'm telling you, I remember talking a number of weeks ago, around 40.41 was going to be the rock bottom on this pattern, and it was pretty spot on from that standpoint. And it was all based on this theory that I'm presenting to you folks every night. Anyway, thanks again. Another week, right? Appreciate everybody for watching. Like I said, I have some potentially significant things to talk about on Sunday night, so mark your calendar, watch the replay, whatever you do. So remember to subscribe and like these videos and hit that bell, okay? So thanks again, everybody, for watching. Have a wonderful weekend. I'm anxious to see how market trades tomorrow, talking about those potential cycles, all the stuff that I covered earlier. So if you came in late, make sure you watch the replay. We'll get it marked up here in the next half hour or so once I finish this stream. So have a great weekend. We'll talk to you on Sunday night. Thanks, everyone. Have a great weekend. See you Sunday night.